We check in now on the latest cattle market news with our market update, brought to you by CattleFax.
Hello, I'm Marcus Brix with the CattleFax update. For the week ending January 13th, the USDA reported box beef cutouts marked some significant one-week declines. On choice beef, the cutout was lower by $12.42 per hundredweight. For select beef, the cutout was lower by $6.84 a hundredweight. The result was a box beef composite cutout, which is a production-weighted average of the two cutouts, turning lower by $8.93 per hundredweight. Pressured by large supplies of beef and competing proteins and light demand typical of the season, this was the largest weekly drop to the composite cutout since September 2015. The wholesale beef market is currently being supported in the mid-180s to low 190s on a per hundredweight measure. These price levels defined most of the trading range between 2012 and 2013. The recent rally in the fed cattle market with pressure on the composite cutout has caused beef packing margins to dwindle over the past month. 5 weeks ago, weekly average beef packing returns showed a profit of near $165 per head, compared to this week's projected average of $6.72 per head. Although astonishing, this is the closest the beef packing segment has come to a negative margin since spring of 2016. Although net positive on an annual basis, the seasonal data shows the packer often has negative margins in the first and fourth quarters. In fourth quarter 2016, beef packing returns averaged $141 per head, mostly due to the strong leverage the packer was holding over the cattle feeder. In fact, the packer only saw 2 weeks of 2016 with negative returns, both occurring in the spring. The cattle feeder would prefer a large portion of packer profits get transferred to their own segment of the industry and has recently taken the rally to regain some leverage. For the first 2 weeks of 2017, the fed cattle price minus hide and offal as a percentage of the composite beef cutout has averaged 55.81%. This ratio is above the long-term average for the first time in over 6 months. The cattle feeder should be cautious still, however, as history suggests first quarter leverage is often very similar to leverage in the previous fourth quarter. Leverage in the fourth quarter 2016 was the lowest in history at 51.2%, but did perform better near year-end after the ratio rallied 4 percentage points off the lows. For the Angus Report and CattleFax, I'm Marcus Brix.
To learn more about CattleFax, your leading source for beef industry market information, visit CattleFax.com.